If you're looking to invest in an S&P 500 index fund over the long term, I strongly suggest you do not invest in the SPDR S&P 500 ETF Trust, which trades under ticker symbol SPY. And the reason is simple. SPY has an expense ratio of 0.0945%, which is way too high for the average retail investor to pay for an S&P 500 index fund. Instead of investing in SPY, here's 5 different S&P 500 index funds that you should invest in. My first choice is VOO, the Vanguard S&P 500 ETF. This ETF has an expense ratio of just 0.03%, which is less than a third of SPY's. IVV, the iShares Core S&P 500 ETF, is also a solid choice. IVV also has an expense ratio of just 0.03%. State Street actually offers another S&P 500 index fund ETF for cheaper than SPY. It's called the SPDR Portfolio S&P 500 ETF, and it trades under ticker symbol SPLG. And then you have VFIAX, the Vanguard 500 Index Fund Admiral Shares. This is an S&P 500 index fund mutual fund, not an ETF. And VFIAX also has an ultra-low expense ratio of just 0.04%, which is less than half of SPY's expense ratio. And the last fund on my list is FXAIX, the Fidelity 500 Index Fund. This is Fidelity's S&P 500 Index Fund, and this is also a mutual fund like VFIAX. And FXAIX has the lowest expense ratio of the bunch at just 0.015%. The only circumstance I would recommend buying SPY over the other S&P 500 index funds is if you're trading S&P 500 options. In that case, SPY is the way to go.